Welcome everybody to today's episode of the Trade Recap series. But since today is a Sunday and we did not go over Friday, we're going to be covering what happened on Friday, and we're going to be setting ourselves up for success in this week coming forward. So take this as a recap from Friday and also a pre-week analysis segment. So let's take a look at what happened on Friday. Friday we had NFP employment change. We had the Canadian news as well. We had unemployment rate. We had all of that, and all of that piled up at 7:30, which is right there. Now, one thing I want to point out is time and time again, the liquidity that news impact leaves on the market can set the stage up for the move of the rest of the day. So at 7:30, what happened? 7:30, we made this very big move up, and then that was quickly followed by a strong move down. Now, although this may not seem significant, what this did was this created lots of liquidity at these highs. People want to enter in right at these highs, and lots of money was pooled at those areas. Now, if you keep that in mind, let's take a look into some volume data just to ensure the overall emphasis of that. Yeah, if you look at it, it was right outside our volume area, and right after we saw a quick push down. So it makes sense. Now, going further into the liquidity that's created, typically when we see liquidity created from high impact news like NFP, CPI, maybe PPI, then they typically set the stage up for the rest of the day. Sometimes it's very easy to understand and sometimes it's not. Now, from this news release, after fundamental analysis, you understand that the direction that the market, you estimate the market to move based on the sentiment from the news, should be choppy or down. There isn't much indication of it going up, although NFP was up, so I expect it to be somewhat choppy, right? And when it's somewhat choppy like this, the market may actually move and chop, but there's overarching sentiment in the market which is down. And why is that? Because of the Trump's tariffs. And because of we're at overall all-time high in fear in the market, and typically when that occurs, we see continued movement to the downside. Now, news did not provide us much insight into where the market will go, up or down, which means that we have to take previous and overall market sentiment analysis into play. Now that we understood that with fundamental analysis we expect price to go down, and we see that what news has left us is liquidity that is above, we can definitely expect that once we sweep liquidity or the overall area, then we can continue with the overall market sentiment that fundamental analysis has brought us towards the downside. And there are two opportunities to take the sells from that as well. We found one there and one there as well. With Bookmap and Footprint and other tools, this would have been much easier, but overall, this provides great value. Additionally, what is really cool is that more opportunities presented themselves during the New York session. And if you use our volume profile and extend it to the end of the session, you see that, hold on. Hold on. Yeah, there, right around CPI time. If you go right around CPI time, we see that overall these areas are very essential and important, and if we combine everything together, whether that be right on CPI time or right before, it's all in a very similar area. using the volume profile tool, which I haven't got much into in the crash course or anything, this overall zone is where most of the volume will be traded. So when we're extended out from it and see rejection towards the upside, we want to head towards the point of control where most of our volume is given, and we headed it around that vicinity. Now furthermore, if we move it right during that time period, our point of control is down here now. But if you want to see during the extended time period, which would likely be, let's see, which would likely be down here, our point of control, would you look at that? Our point of control is right there. And if you simply extend that line out, we would have perfectly tapped in at our point of control. And then after our point of control, we saw sell-off occur once again. So when we're very extended from our area of 70% volume, and we see proper rejection to go back to that volume area, it's typically a great area to take profit. Now, here are the settings for my fixed range volume profile if you are interested. Okay, so now that we've seen the opportunities that presented itself on Friday and the importance of overall high impact liquidity, especially made from news, you can understand that combining fundamental analysis with liquidity levels can honestly be a great thing to do to tie in market sentiment with direction you want market to move. We also learned the importance of our fixed range volume profile to see how exactly we can make different trades based on a certain time period where if we see a reversal happen, it will go straight to our TP. Now, this is all hindsight, but looking before this area, that would have been quite a nice trade. And if there's order flow and confirmation to support that as well, it could be a great play. Think of it like in terms of statistics. This would somewhat be called as mean reversion play, as we're trying to go back to the price of equilibrium or to the mean. And yeah, that's essentially all I have there on Friday. The main points: the news, the volume profile, and continued moving on. We have this overall continued downside. And this has been one of our biggest drops in a couple of years, I believe, which is quite insane. And right when we opened today on Sunday, we saw this crazy gap down. And typically when we do see these gap downs, we create areas where we typically need to fill this gap before continuing lower. And I wouldn't be disinclined to vote for price going on higher, but it could definitely go lower as well because of the overall market sentiment. But if we take a look at market profile from there to where we're currently at, this is the area where most of the volume is, which is pretty obvious. And if we want price to go up there, we need a pretty big catalyst, because this candle itself is a drop of almost minus 4.51% or almost 5%. And if you look at this overall time, we fell over 5% on the Sunday market open. For the week being, let's do some quick analysis to see what may happen in the market. Let's mark in our gap fill area once again, and let's place a low right there. So taking a look, let's go back. These are the November 2023 area. We fell to a price where we're at back in November of 2023. When we were at these peaks right here, wouldn't you kill to get an entry down there? You definitely would. So I would definitely consider DCAing or dollar cost averaging in where we're at right now. Let's see if we may continue going lower or see reversal. So we do have significant demand zones around this area on the 4-hour. I'm just going to do 4-hour analysis because we want to stay on a high term to do pre-market analysis, pre-week analysis, but also for the time being. We also potentially could consider, I'm just marking out, and of course we want to consider these lows. If you break those lows, you can could go down to 15K, which is quite insane. That's 2023. Alright, so going back to the current, we could create analysis of this sort. Alright, so if we break past these lows and tap into this 4-hour demand zone right here, and we do break structure towards the upside, we definitely could fill this gap before potential movement downwards if the market is still in that case. But if you get down to these levels and break it, then we could definitely push into this area, which would be the next area of high significance. But if we break both these areas, we're going to go down near the 16K levels. And it's likely that this doesn't even have that much high impact as well, because our most high impact level is down at these lows at 15,591.25. So it's definitely a possibility we can get down to 15,591.25. But before that, I would definitely like to see a fill of this gap for further confluence, because I don't like seeing a gap there, because at any time market may just want to go there and fill the gap so that we can then move how the market actually wants to do. Gap fill areas and news areas provide liquidity that is much more of a higher impact than other types of liquidity. That's why I'm providing so much emphasis to this gap fill as well. But to conclude, the overall bias is that we may see price continue to go lower, but before we do so, we may want to fill in this gap to see any further potential movement. Now, if I open up my news, let me see if there's any high impact news in the week. High impact news. Tuesday, Monday. There is FOMC on the 9th, which I believe is Wednesday, which could be a catalyst for either potential downside or upside. And as always, FOMC is a high impact news days. You should typically take those days out. And on Thursday, we have CPI, and Friday, we have PPI. So this week is definitely filled with a lot of news, and that news could be a catalyst for the next movement in the market. You've seen this big sell-off, and we may fill this gap and continue to the downside, but if news provides a good enough catalyst, we could make our way back up. But it all depends on how the market opens tomorrow on Monday, and if we fill in this gap or not. That could definitely provide insight into where we can go next. But overall, like I've mentioned before, I do want to see a fill of this gap before we go lower. But if we don't, we just have to trade being a bit more careful. And from Wednesday to Friday of this upcoming week, you have to be very careful and keen and understand what happens, because that could set the stage up for the rest of the month after the next week. And I found all of this news using Forex Factory, which provides you all this news. That's where I found out Monday and Tuesday we don't really have anything much. Wednesday we have FOMC. Thursday we have CPI, and Friday we have PPI. Another tool for news I use is Financial Juice, which provides it in a very simple way as well. As you can see, CPI, PPI, like such. But yeah, that's the overall pre-week analysis. love to see that gap fill. If it doesn't, that's okay. We have to be more careful and understand the overall sentiment we get from the news as well, as that is essential for the upcoming weeks after the news release. And that's where I'll leave it out here for today. I know I was a bit repetitive, but I really wanted to let the understanding of the pre-week analysis truly set in. Now, actually, before we leave it off, let's go a bit deeper and take a look into VIX as well, which typically trades in the opposite direction of NASDAQ and S&P 500. Okay, so this was the COVID drop, right? And you see how high we went on the COVID drop? We've only seen two levels that have went that high after that. We saw it in August 2024, and we also look to be gaining pretty high momentum right now as well. And these breakouts should not be tampered with, especially if they're still open as such, right? We did create a gap fill area in the bottom, and we're getting towards these highs, but looking towards everything and momentum as well, momentum definitely looks like we could continue rising, which means the price of NASDAQ and S&P 500 to continue dropping, which is good to understand. And S&P 500 looks pretty much the same as NQ with the gap fill. So it pretty much leaves it here for today. The gap fill needs to be filled for more higher impact and higher confluence trades, but if not, gotta be a bit more careful. VIX looks like we're going to continue going to the downside, and the news that will be released later from Wednesday to Friday will be essential towards the movement that the rest of the month may provide. Sorry I was so repetitive, but I hope I let that sink in. Thank you so much. If you have any questions from this session here today, please leave a comment down below or join the Discord for any questions as well. I'll be happy to answer any questions. Thank you so much, and I'll see you guys tomorrow for a trade recap session or market analysis if I make any trades. Have a great day. Goodbye.